the globe has seen unprecedented inflation. We also saw inflation which was more supply side. Some of it seems to have been controlled. Do you think the worst of inflation in India is behind us now?
See, when we look at inflation, we have almost come down by about 200 basis points as compared to the peak of the inflation which we saw in the country. So I would say that the supply side constraints which are there essentially on account of the contact heavy industries, contact intensive industries, we are seeing that there is a very strong demand coming from the hoteling industry, from aviation, etc. And apart from that, even the agri production also is quite encouraging. So I think all this has got an impact, and the agri production particularly would have an impact on the CPI. So I expect that the inflation scenario also, leave aside the imported inflation which we have on account of the crude prices, even that also we might see some kind of a better traction. And because we are increasingly going towards the renewable energy, which will reduce our import bill in due course. But of course, there is a very conscious effort on the part of the economy to de-risk itself from as far as the crude import inflation is concerned.
And we've managed to control the pass-through of the crude volatility by a physical support measure for our oil marketing companies, almost 20,000 crore and plus. But let's also talk about one other big theme that we have seen in the last several months, practically for the whole of 2020. And we here in Business Today TV at the India Today Group call it the big banking turnaround. Public sector banks back in favor and the flavor of the season. Is this yet another instance where I should ask you that the worst seems to be behind, and now as public sector banking and overall banking in India is fully on track?
Yeah, I think post the global financial crisis in the year 2008, and also the AQR related issues which were there in the year 2014, the banking sector in general have understood the lessons which were there, and to that extent they have significantly strengthened their risk management practices. That having said, so they are very, very mindful in terms of the underwriting, they are very mindful in terms of the control and follow-up of the loan book, and also they have provided very well. They have identified the stress and they have provided for that stress. And to that extent, I would say that the public sector bank's balance sheet is quite robust now. And apart from that, the recapitalization which has happened over the past couple of years, that has also helped them to really ensure that there is enough growth capital available to support the growth ambitions of the economy. So I think overall, I would say that the provision coverage ratio for the system as a whole at about 71% plus, and also the capitalization being very strong, they are very well placed to support the growth of the economy.
The same point really for SBI, if you could give us a quick sort of overview.
Yeah, we have significantly strengthened our risk management practices. We came out with in fact, risk review department, which is actually evaluating each of the proposal and thereafter giving their inputs to the credit committees. So that has helped us in terms of ensuring that our portfolio quality index keeps on improving, and that is something which we monitor on an ongoing basis. And apart from that, our own the PCR also, when it comes to the corporate book, it would be actually 80% plus.
Okay.
So to that extent, I would say that we are very well placed when it comes to our provision coverage ratio, when it comes to our underwriting, when it comes to our control and follow-up of our advances. We very closely monitor even our SMAs on an ongoing basis. We have become a very significant retail book, so we ensure that the pre-delinquency calls are there. And all this has led to a situation where our retail book actually has got around 0.5% of the GNPA, which is, I think, perhaps the best in the retail lending sector. And I think when it comes to our corporate credit cost, it is also, we are seeing that for past, in fact, in the last quarter, we saw that it was less than 100 basis point. And I hope that we will be in a position to demonstrate even much better quality of assets going forward as well. So this is what my assessment is.